When traders talk about passing a profit valuation, they often look for a special indicator or a perfect setup. My experience was less glamorous and a lot more useful. I used a trend following process. And what made it work was not prediction, it was a process, patience, and accepting that uncertainty has to be managed, not eliminated. So in this video, I will explain steps that I have done with trend following system, how I passed the FTMO challenge and verification accounts. So they are the two-step challenge. So for FTMO, the FTMO challenge and verification reward consistency more than drama. That is exactly why the trend following fits. It accepts a low win rate. It expects small losses, and it relies on a strong risk-reward ratio to carry the account over time. So in that environment, the real edge is not being right often. It's not being right often. Now I will show you my FTMO account to see how the general stats is. So this is the general stats from a verification account. So you can see that this is the results that I got the profit of 500 USD, which is equivalent to 5% of the account. You see that the overall win rate is only about 14%. The average profit is 228. Meanwhile, the average loss is only about -20. So this is like 11 times risk-reward ratio. The average profit is 11 times the average loss. And the maximum profit for is 455. Almost almost compensate for the final result here. And the max loss is only -50. The edge is being disciplined enough to keep showing up the same way. The first lesson was position sizing. If you are not sizing trades accordingly to the rules, you are not really executing a system. You are improvising. Trend following can survive a streak of small losses because that is built into the design. The rules, which is also the trading objectives from FTMO, it requires that the max daily loss cannot go beyond 500 USD. Mine actually just touched to 136 USD. And the other objectives was that the max loss cannot go beyond 1000 USD. So actually the maximum loss I got was only about 200 USD. So for the trend following system, it's very easy to control the drawdown risk. But if the size is too large, those normal losses become emotionally expensive and financially disruptive before the bigger move ever has room to develop. The trade has to be small enough that a stop loss or even a bad market regime does not distort your judgment on your account. The goal is not to be right on every trade. Let's have a look at the trade history. That today I got the message from a guy from the Reddit community. So I asked him to send me his trade history. Just want to help that if I can suggest him another way to pass the FTMO account. And this account basically is also the same size with my 10,000. but the loss is already 456. So only after about 8 trades, it got 450 USD loss. So that was huge. To me, that was huge, and of course, that is relatively huge to trend following system. And we can have a look at these trades, for example, for the gold. He entered the trade at $4,066 per ounce, and the stop loss, he set the stop loss level about $6. So basically, with the size of 0.1 loss size, he got the loss as minus 56, which is my maximum loss trade, if you remember. So in terms of setting the stop loss level, he also put a very narrow stop loss level, only $6 away from the entry level. So the reason why I say it's narrow, because if you remember my video about the hidden costs, the $6 here is like equivalent to trading with M1 chart. For the M1 chart, the average ATR, the average true range, is about 1 to 2 USD movement per minute. So with that ATR, I often define the noise is about 3 to 5 times of the ATR, so which is equivalent to about $6. So basically, this guy has set the stop loss level right within the noise of the M1 chart, which is not recommended. So he won't be stopped out very easily, just because that the stop loss range is narrow. So this could be improved by reducing the lot size, let's say 0.05, and then he increased the stop loss range up to $10. It will be better. It will demonstrate how you really hope for the market direction, rather than just scalping the noise. I think the same thing happened with the other pairs. Yeah. The lesson here is that we should place the stop loss level beyond and outside the noises. So this is where you will not be bleeding, making loss from the noise. Let's go back to the slides. So the goal is to make sure one wrong trade does not damage your ability to keep trading correctly. The second lesson was hunting for the right position. Trend following is selective by nature. It does not ask you to trade constantly. It asks you to wait for market condition where the trend has room to develop and the risk can be defined clearly. Of course, there's always exceptions, but as long as you know what you're doing and you can control the risk budget, it's fine. I will give you an example from my current FTMO account. So this is my current account. I was hunting to be in the right position, and you can see that I was bleeding from the starting balance, go to about near minus 4%, but this is very normal to me. And now I'm in the trade with the unrealized profit position. So I'm hoping that I can recover from these. In the bad scenario, even with my current trade making loss, I still be okay because I'm still far from the maximum minus 10% maximum allowable drawdown. You can see from here, from the chat, you will see that I was hunting for the short thesis position that I bet that the market will goes down based on the daily chart bias and some other analysis. And I made a streak of losses from here. Yeah, a lot of losses. Here. All the loss region. Also here, loss until I find the right position from here. I got the opening. I got the profit, unrealized profit from this position. So this is the streak of losses. When we was trying to hunting for the right position to protect my thesis, actually I made consecutive losses, which cost me about 600 USD. But until I get the right position, I'm in profit. I will let the market breathe in. I will let the trend have time to play out. If it goes down, it's good to me. If it goes back to my stop loss level, I don't really care. I will keep hunting for the right position. Actually, I did the same thing to the previous account. They all have the kind of period that making streak of losses until it brings a lot of profits for me. Let's have a look at once. Say the verification account. Yeah, the equity curve looks like this. As you can see here, I made losses until like the losses about -2% before I break even and then made some profit up to +2%. And then it was bleeding again, but then I recover back with higher balance. So that I keep doing that until I reach the 5% target. So that's how the trend following equity curve looks like. So that the selectivity matters more than people admit. Many traders feel productive when they are active, but activity can be a form of self-deception. I was not active when I was in the trade. I just let the market runs. I don't want to trail the stop, and I did not trail the stop. I look at my position. It has profits. I just leave it there because I expect much higher profit from that. As you remember, my stats was about the risk-reward ratio is about 11 times. So if I have spent about 600 USD losses, I will expect about 10 times, 5 times or 10 times of that loss. At that time, I will be prepared to take profit. So that's how I manage my risk return profile. So I will expect this trade like having profit about 3,000 USD, and then I will consider the exit because the current account is already minus 4%. So I don't want to be too stubborn trying to insist to stay too long to the trend. So basically, with that kind of passive waiting action, I can save me from stress and time trading costs. The right trade is usually the one that matches the regime, the structure, and the edge. So the wrong trade may look reasonable in the moment when we enter the trade, but it tends to cost you time, energy, and confidence. I also not perfect in choosing the right position. I had to trial and error, and I leave time and leave space to learn and to recover from losses. No one can be perfect, so don't force ourselves to be right all the time. Fewer decisions also means fewer mistakes. So this is the third lesson. The third lesson was staying in the trade long enough for the edge to express itself. A lot of traders can enter a trend, far fewer can sit through the uncomfortable middle. That is where the money is often made, and also where discipline gets tested. Let's look at my current 200,000 account. From here, I want to show you that how I was very consistent to stay in the trade without fear. This is where I shot, and in the morning the price went down very strongly, which made me happy. But in the next 1 hour, the price moved back to the stop loss level. So I was kind of disappointed because, okay, I accepted that I will make another loss again. But I stayed still because that was the plan. I made the stop loss level at the level that I feel that, and I also saw that it's a appropriate, reasonable level. It was about 20 USD per ounce, the distance from the entry level. So the price turns out to be rejected from here, and from there on, there was a time that the trade was really in the good profit, because the market pressed down the price down to 41.16, and then the market price go back here again, which again made me disappointed, because it was like I almost foregone all the profit when the market goes down to 41.19, and then the market rebounds back. But again, I stay still. I try to keep myself in the trade as long as possible, and the market rewards me the whole trend downward, as you can see from the chart. So the current situation was that, yeah, I have foregone about quite much profit, about 400 USD, but I don't care, because I won't wait the market to consolidate around here about 4,100 USD, and then I will wait if the trends can really play out and keep going downward. That's what I waited for. So I did not do anything since I got the profit from this trade, because I also explained in another video that I want to avoid the hidden trading codes. I don't want to take profit, and I do not want to make more transaction costs because I try to re-enter the trade again somewhere else in the middle. it was very costly. So activity is not age. Early profit has a way of making itself feel sufficient. That is when the urge to take profit too soon shows up. But trend following depends on letting winners run while managing risk on the way. That does not mean being passive. It means managing intelligently, very smart manner. If the market structure supports continuation, the trade deserves room. So we need to understand the market structure, avoid noises, and avoid the fears, especially in the US market session, where all instruments in very high volatile environment. If the trend weakens, then the scale out or exit rules should be coming to protect the capital. The control comes from the process, not from the constant intervention. The uncomfortable part of many traders is the low win rate, but low win rate is not automatically a flaw in the trend following. It is often the cause of accessing asymmetry payoff. I can show you another example of low win rate. I still pass the FTMO account, but with very low win rate. Let me see where I can get it. Yeah, so let's look at the account that I made some payout. This account, actually, I harvest the profit quite early because I want to get back the fees that I have paid for the payout first. So I decided to cut the winner soon. But I mean that the point is, this is the account that was with very low rate. As you can see from here, the win rate was only 4%. The number of trades was 26. So I think I made almost losing trades before I get the profit of 500 USD. So it still be okay. Look at the equity curve here. Yeah, even I made a long streaks of losses, minus 3%. I still gain back 500 USD, which was 5% in profit. And then I got the payout from it. So you accept many losses, small losses, so that a rare, larger move can carry the account forward. That is why the equity curve often looks like a steady upward drift with frequent setbacks and occasional larger gains day to day that can feel unpleasant, but mathematically it can be rational and robust. The trade duration point matter too. In my sample, my real life trading account, the longest holding trades extending beyond 12 hours were the ones that produced most of the profit. That is not unusual in trend following. The extended hold, not the frequent scalp, often pays for the whole sequence of attempts. So the real job is not to overmanage the move that is actually working. Again, this is where I repeat my point. But we can also see that from the account analysis. You can see from here the results by the trade duration. So the largest profits come from the trade which I was holding more than 12 hours. That's the nature of the trend following system. What helped me pass the FTMO challenge and verification was not certainty. It was acceptance of uncertainty, with rules that made it manageable. Trend following is not about being clever every moment, but it is about being disciplined enough to exploit the moments that matter. And for traders and investors alike, the lesson is simple: control risk, size honestly, and let the winners do the heavy lifting. Thank you for watching.